If you see for the last 1 year's data, the burgeoning interest of thematic sector specific funds has been rising like anything. What is your view on that? Is it the right way that an investor should approach, or no, it should be index or maybe flexi caps or whatever it is, because they automatically take some exposure if that sector is doing good?
Yeah, so see, it depends on what type of themes are these. When are they, when are you buying those themes? See, themes generally have sharper cycles and fluctuations because they are slightly narrower than a diversified fund. A diversified fund will have, wide range of sectors and the fund manager can navigate, whereas themes will have narrow range of sectors. So if that sector sometimes gets overheated, he can't do much. Then you have to live with the volatility. So this awareness is important. Thematic funds definitely have a role to play. In my own portfolio, I would have, out of my entire 100 rupees portfolio, I would have around, close to 12% in thematic funds. My natural resources fund is a part of my portfolio, which is energy and metals. Then my healthcare fund is a part of my portfolio, which I invested in 2019 when healthcare was completely out of fashion. Natural resources I invested in 2020 on the day when energy prices went to zero. And I have my World Gold Fund, which I've been investing gradually over the last 5 years because globally gold mining stocks have been beaten down. They are available at 6-7% dollar dividend yield, free cash flow yield. And gold itself had gone nowhere. So my approach to thematic investing is to buy a theme which currently is in a low cycle and where most of the risk is now in the price. And there is reasonable margin of safety on the downside. And if the underlying theme from a business cycle point of view is also in a low cycle, and because of which the market has also beaten it down, and the theme is under-owned in most portfolios, including our own diversified funds, is when I would like to add a flavor of that theme in my portfolio. I would avoid doing what mostly investors are doing today, which is investing in themes which are at the peak of their cycle. Now, that is unfortunately the design of the human brain. The human brain likes what looks good on Excel sheet today. So if my fact sheet returns look good, the assumption is this is a good fund for my future returns. But most often thematic funds have cycles. You have to remember this too shall pass. So if the returns are very poor, invest because you know this too shall pass and the returns will become better. But if the returns are gloriously high, investing is risky in those type of themes. So also a large momentum in thematic fund is also happening because it's not the demand alone, it is also the supply. A lot of supply of new products is also coming through thematic funds. So I think it's a combination of both. Investors are, like always, we like past returns. So I would urge investors to be conscious, talk to their advisors, understand what is this theme about, is it fitting in my overall portfolio? Or am I buying it just because DSP is launching it or some other fund is launching it? If you are buying it because you are launching it, then it's not the right strategy. There are many, pharma companies which are launching a drug every month. We don't go to the medical shop and say, आज कौन सा नया drug launch किया, मुझे दे दो. म्यूचुअल फंड इन्वेस्टिंग में नॉर्मली वो होता है, नया क्या है, तो वो नया आपके लिए सही है तो ऐड करो, आपके पोर्टफोलियो में कोई गैप फिट हो रहा है, देन डू इट. सो अगेन न्यूआंस इज इंपॉर्टेंट. एट लार्ज I would say an investor who doesn't understand cycles and themes and valuation should not experiment with thematic funds. His first priority should be diversified and flexi-cap funds.
Got it. So like just you rightly mentioned about, people going to a fund when it has already performed, when it is already heated, right? Yeah. So we did a study and I'll show that to you. So what we did was so typically when I first purchased my first mutual fund, it was in 2017 out of my articleship stipend. And I also Googled, like everyone else, best mutual fund to invest in. And of course, the SEO generated returns, the SEO generated results will of course yield and take you back to what has performed the best in the last 1 year.
Yeah.
But then we did the study which says that जो पहला 2014 से 16 में आया वो 2017 से 18 में 198 की रैंक पे हो गया. If you see this pattern repeats, जो टॉप 10 में वो डबल डिजिट रैंक्स भी नहीं ला पाता. दैट इज लार्जली बिकॉज ऑफ थीमेटिक फंड्स, राइट?
नॉट ओनली थीमेटिक, but all type of funds have cycles because markets have cycles. That's
right. Small mid cap also.
No, even a simple diversified fund, if there are 20 diversified funds, if you just assume that the industry had only 40 diversified funds, the top 5 funds every year will be different, and there is this performance migration because nothing is constant, and that's the first universal principle of investing. Returns fluctuate because the underlying stock prices fluctuate. Of course, the fund manager will keep navigating to where he believes now he should get out of overheated stocks and go into again what would be tomorrow's future. We all try to make the return, but we also sometimes are either early or late. We also make mistakes. We are not perfect. So this concept of performance migration is universal. World over, this is a challenge. So even I used to do this. I can't blame an investor. In spite of doing this job 24/7 from 98 till 2007, this was my way of investing personally. Then look at what has done very well in the last 1 year and put more money there. What is not doing well in the last 1 month, wahan se nikal do. In 2007, I read, I think Howard Marks or Ben Graham ka koi ek paragraph. I was reading that book where it said that if performance is cyclical, then should you buy what has performed well or what has performed not well? That was the first tubelight moment. That if it is going to be cyclical, where are you investing in past performance or you are investing for future performance? And that was the first tubelight moment, and hence I always say that the biggest enemy of our returns is chasing past returns. Past returns belong to someone who invested in the past. Your new money has no right to earn that past return. Your new money will earn the returns from tomorrow, and continuity of returns is very rare. World over, if there are millions of funds, there are hardly any fund where there is performance, continuity. There will be cycles.
Got it.